I am the enrolled agent, Raquel Castillo. The IRS calls us the American tax sweetheart experts. So we know about the tax law. On the top of that, I have an international taxation, which is a different branch of the regular taxes. It's something else, okay? So today my intention is to talk about U.S. taxation when you live abroad. Normally, many people think if you don't live in United States, you don't have to file taxes. Unfortunately, it's not correct. It might represent another set of forms that you need to attach with your tax return. So that what make it a little bit annoying for you and very helpful for me. So I'm going to start with the presentation. I hope you guys enjoy it. Please take good notes because we have a lot of good information around here. If you excuse me, I'm going to take my jacket off. U.S. taxation. This presentation is only for the educational purposes, guys, because could be many different things that we need to take in consideration when we give advice. Unfortunately, with the IRS, there is no simple questions. On the top of that, we're talking about U.S. international taxation, so they are nothing simple. However, there could be, but the fact or the hint here is to understand why we have to file different forms that I'm going to talk today, and why you have to even do it. Here is not that because you live in abroad that you have to file. Any person who has financial assets outside the United States needs to file them. For example, if you if you live in Estados Unidos and United States, right, and if you have if you have a bank account outside the United States, and goes beyond $10,000, right? This is a very low threshold. I wish I have $10,000 in my bank account. However, it's $10,000. It's not that a lot of money. So, but yes, if you have that amount in a foreign bank account, even though that you live in United States, you have to file a special form called FBAR. So, but I'm going to talk about that a little bit in a moment. So, what is an enrolled agent? Yes, this is something that I've seen a lot, and sometimes when I explain to my clients my qualification, they don't know what it is. So please let me explain you, so you know with what kind of person or what kind of the professional are you dealing with. So the enrolled agents are the ones we know the tax law. We know how the income is taxed, and we can interpret it and put that information in your tax return, okay? We can represent the taxpayer before the IRS. I have that power. And this is, enrolled agents might have 123 years old. This is how old is our profession. This is my certificate. Well, you know, I'm glad because the IRS recognized all the effort because it's a tax system totally different than Costa Rica. U.S. has a very different way to do taxes than Costa Rica. So I have to learn from zero and learn the culture. It took me like 2 years complete this test. So this is my certification as an enrolled agent. No, that's not. So what that means when you live outside the United States, what kind of requirements do you need to accomplish? Or what do you need to add in your tax return? Or what kind of forms do I need to file that are important? So normally, I know the people like to, when they retire, they want peace. But when you live abroad, you start to acquire a home, open a bank account, maybe you acquire a property that you want to, this become a rental property, so on and so forth. So the IRS code, what they tell us is, if you are a U.S. citizen, no matter in what part of the world you are, you have to report all your sources of income. Okay? So what they're telling us is, for example, if I buy a house, right, and I want to become the house a rental property, Uncle Sam wants to see it in the 1040, okay, reflected there. So over here, what I'm going to talk about is um, the due days, okay? Although April 15 is our key due day, correct? Now, when you live outside the United States, one thing, let me explain you this. One thing is your mailing address, and one thing is where you live. We know in Costa Rica the address are not trustworthy, right? So the way they explain the address almost impossible. So normally an IRS letter get lost. So we use like U.S. address. So although in the 1040 shows a U.S. address, correct? If you live outside the United States, you have until June 15. This is automatic extension. You don't have to do anything about it. However, if you know that you're going to owe taxes, April 15 is going to be our day. Please do that, okay? If you have any suspicion that you're going to owe money to Uncle Sam April 15th, please pay it, okay? Because definitely, if we don't do that, although our extension is until June 15, pues the IRS, what they do is charge interest and the amount due. So on the top of your tax that you have to pay, you will be charged if you don't pay by April 15. Interest and will be interest, and depends of the situation, will be late to filing. Yes, sir.
So we normally don't get our taxes filed till October. Is that, can we still extend to that, or can you extend further?
Yes. This is what I'm about to explain. That's a great question. Yes. Okay. So we're talking about that we don't have to do anything by June 15, right? Because it's automatic extension. But what happens if I don't have all the documents that I need to prepare my tax return? In June 15, what we do is to file a form called 4868, which is the extension. Okay, that allows to file our taxes in October 15. And I'm sorry to mention this again. If you know that you owe taxes, please pay it. Okay? Because the interest from April to October is going to be good money. So it's important to do that. Now, if you need more time for whatever reason from October, we can have an extra extension, but this is a letter that you write to the IRS because it's under special circumstances that you need to file this extension. Okay, because that extension from October is going to give me time to December 15. That is going to be the last extension. I don't like to talk about how the IRS tax people, but if I want your attention, this is something that I need to bring up because the IRS don't play around. Definitely don't. So, and you know what is the worst part, guys, than all of this? Those are more likely informative form. You don't have to pay a dime for that. But if the IRS caught you, okay, if the IRS caught you, is going to be these two situations what's going to happen. One, if they find out that you didn't know that you have to file, okay, we're talking about a penalty of $12,000. This is per year, okay? So you have this per year. And if, for example, if they realize or they find out that you knew and you don't want to do it, the punish is worse, is $50,000 per year. So, and the FBAR, which is the FBAR is the reporting bank accounts or accounts, basically accounts for the IRS. In this case, the FBAR goes to a different place called FinCEN. The FinCEN is a sister department of the IRS that basically what they do is dedicate to the money laundering. So this goes at the side of your tax return. So the IRS, the FinCEN, what they want to make sure is to find out how much is your bank account worth, the highest balance. That's it. If those bank accounts produce income, okay, what they expecting to see is that bank account that you report, if they produce income, then when the income be, normally that is interest. That interest needs to be reported in the tax return in Schedule B, okay? And Schedule B is a form or schedule, by the way. They have three parts: have interest, dividends, and down there they will ask you this question: do you have foreign financial account? Yes, no. When you mark yes, so the next question is going to be, how is this bank account goes beyond $10,000? And you have to say yes. When you do that, you immediately have to file the FBAR, because what they happen is you telling the IRS that I do have that a bank account, and this needs to be reported in this other institution called the FinCEN. So we agree that tax return goes to one place and the FBAR goes to another place, right? Okay. For example, the other form that is very common in my tax practice is the 5471. The 5471, they talk about foreign assets. Normally, a foreign asset is an asset that is in a corporation. That's very important, because that means this form, the 5471, is for somebody who has shares in a corporation. When you have a shares in a corporation, no matter in the place in the world, could be in Costa Rica, Nicaragua, call the country that you want it. However, if you do have shares, you have to report it in the form 5471. Okay, this is complicated, the form. I like it, definitely I enjoy it, but it's not easy form. So you have to know different factors. You need to know how many are the rest of the shareholders. If this is U.S. citizen, or maybe they are not. So in this way, the 5471 is going to be reported. How much is the asset? How much is going to be the price of the asset too? And yes, it needs to be with this one. Yes, it goes with your tax return. Now, the problem is with the 5471, we have a penalty of $10,000. That is if you are non-willful. Non-willful is when you don't know that you have to file. So when I mention non-willful, so you didn't know that you have to file. So the penalty, okay, for a 5471 that needs to be included and is not, is $10,000. Now, again, when you are willful, is $50,000. So this is a big difference. Another form that I like to talk about, and this is very normal too in my tax practices, and this is a weird way the IRS like to complicate things with the taxpayers, is foreign financial accounts, but this is for the IRS. Normally, for example, when you file a FBAR, right, because that means that you have financial accounts in some place in the world, okay? And if you have, for example, a house, which is normally you will put in a corporation, you need to make sure if you don't have to comply with the 8938. So normally with my clients, I've been in the tax business for 20 years, and I'm so happy to say soon I will have 21. Makes me so proud, amazing. And then, okay, the 8938. So in my tax practice, what I see very often, people having an FBAR. Why? Because they want to open a bank account in Costa Rica to pay expenses. Also, other thing that I noticed too is when retirees get friends with others, and one of them get sick. So as to the another, can you please, I will give you a signature authority in my bank account, because if I get sick, I want you to have, you'll be able to take money out because I cannot. So that's very cool, because that means somebody's human. However, when that happens, you need to report that in the FBAR. Okay, so normally it's going to be the person who has a bank account over here in Costa Rica. The 5471 is going to be a corporation with U.S. owners, okay? And the 8938 is going to be the combination, the FBAR with information and the 5471, because over here is only for the IRS. The FBAR, let's remember, go to the FinCEN department, which is different than the IRS, but 5471 and 88 and 8938 goes with the tax return. The 5471, if, for example, if you don't submit it and you knew that you have to, the IRS will charge you $10,000. But if they knew, or say you knew and you didn't want it for whatever reason, because you feel like it's your privacy, why the government needs to know. Now with the way we communicate, okay, it's almost impossible they don't know. In fact, that's remind me something very interesting about the FBAR. So the FBAR with the FinCEN, what happened is the IRS had an agreement with 105 countries. What that means is the people, the U.S. citizen needs to report the foreign financial accounts, but also the financial accounts needs to report the people. So this is the way they caught you, because they have that agreement. No, it's no because they won't know. Yes, they do, because they have an agreement. So that's the reason, although it's important for you to realize or to find out if you comply, or if you need to comply with the FBAR. So finally, we're talking about the 3520 from a U.S. citizen, if I'm not mistaken. Or backwards. No, for a non-U.S. citizen giving a gift to U.S. citizen, because that's other thing that we're going to talk about eventually. So, now let's review a little bit what are the requirements for the FBAR, so you at least have an idea. Okay. Also, you can look up for the instruction. The only thing you need to do is like type in Google bar, FinCEN or FBAR. So they will put there a lot of information about the FBAR. So, but basically, is that refers to reporting for foreign bank accounts and financial accounts. So financial account means like broker account, CDs, any kind of money producer type. Because also, for example, if sometimes you can decide to invest money in a broker account over here in Costa Rica. So that is taxable. That needs to be reported in the FBAR with the highest balance. So what do I need to find, or how I know that I don't have a FBAR? The thing is here that you have to take all your bank accounts. Let's talk about for a moment what is a bank account. Okay, could be a bank account, could be a CD, broker account, maybe with Bank San Jose dealer, which is one of our biggest bank account, the bank financial institution that we have in Costa Rica. So definitely those kind of things needs to be reported in the FBAR. The FBAR can only be e-file. It's no other way. There are some forms the IRS wants you to mail out, but others only needs to be by e-filing. Okay, I like this. Let's see. Okay, the word of precaution that means is, for example, there is financial institution, for example, Social Security, Merrill Lynch, Charles Schwab. Those financial institutions, or those institutions, what they do is when they find out that you live outside the United States, they think that you're not U.S. citizen. One thing is live outside of the country, and one thing is renounce to you U.S. citizen. So there is, what I understand, there is a misinterpretation about that. However, when you realize that what they do is withholding more money than they should, because, for example, for retirement, the normal withholding is 10%. Okay, so the financial institution, the one that pay you your pension plan, they must take $10,000. 10% of your income. okay, to be withholding in order to be against to your tax liability. So the point here is, for example, if you know, for example, I don't know, Merrill Lynch, when they pay you, you see that your income is 30% less, it's important to call them, okay, and say, hey, look, I am not U.S. citizen. I'm U.S. citizen. So the correct withholding is 10%. Oh, ma'am, it's what happened is we need the proof of citizenship. Okay, so this is when you send your passport or whatever document they request from you. You send them so for proof that you are U.S. citizen, so they adjust the pension, right? But now, what happened with the money they withhold? They withhold extra. In order to get that money back, you need to file taxes. Sometimes you don't have to file taxes. There are special circumstances. But when you might have a refund, you need to file a tax return to get your money back. Okay? Let's see. The foreign earned income exclusion. Well, this is for people who work outside the United States. And I want to make a differentiation here before, because what happened is the IRS not only withhold taxes, they also, what they do is, especially with derechos, only self-employed, is that amount of money, they collect that money and they send it to a Social Security Department to build a future pension. So for example, if you work for someone, okay, that means that the money that you earn outside the United States, that won't be no taxable. It's not subject to federal income tax. Okay? Now, when we are self-employed, what happens is we are subject to self-employed tax that we pay in our tax return. So there are two different matters. So just keeping in mind, so when you have self-employed, you will be exempt for federal income tax. But if you are only and you work for an employer, no matter if it's in Costa Rica or in the USA, the fact is that you're here making their money. Okay, that's the key. You cannot use never ever a foreign earned income exclusion, because that is only this is a privilege for people that are only outside the United States. The people that are inside of United States, they cannot use this. Okay, so this is around 100. You can make around $108,000 this year, so that money won't be taxable. But however, has his things. He has his own requirements. So important. This is what I mean. What happened is many people think the exclusion will include certain items. However, all of these items, although they are in a foreign country, they will be taxed as in the U.S. Okay? So, for example, the exclusion doesn't apply to interest, dividends, capital gains, or retirement income or rental income. All of those has its own set of rules. You could work for a U.S. employer or a U.S. employer or a foreign employer. It's that the reason why it's saying that is because the person who is doing the money is outside the United States. This is what that means. So even though you are a U.S. citizen and you get paid in the United States, okay, you still can apply for the foreign exclusion. If you work here and you work for a Costa Rican employer, you still can use the foreign exclusion, okay? What you cannot do is use the foreign exclusion when you are in the United States, because that is not allowed. Uh-huh. Okay, this is the 45471. The 45471, what they tell us, is the financial, is the asset that we have in a corporation. If, for example, it's not the same that you buy a house, okay, and you put it to your personal name, because in that case, we don't have to report it. But if you decide to put your home in a corporation, okay, yes, we do have to report it, okay? So that is very important. For example, also, even though the corporation doesn't make any money, that's what we call a dormant corporation. For example, a house. Normally, if your personal home won't make any income. However, for whatever reason, for liability protection, that you would like to put the house in a corporation, right? You have to remember, even though that doesn't produce any money, we have to report the 5471, okay? For example, one thing that I want to mention now here is I have in my tax practice, I think a few years back, I have a client who told me, and this is for a refund. He has a very good refund coming up. So the problem is he has a 5471, so he came to me and say, Raquel, why you don't send my tax return and then we amend the return so I can have my refund faster. So I say to the sir, I say, look, sir, I know that you need your money. I understand that. What happened is, if I would do that, the IRS, the first thing they're going to do is to give us a penalty, and a very big penalty. Then, no, in his case, wouldn't be $50,000 because he knew that he has to file. So, and I say, sir, I'm sorry, but we cannot do this because if we don't attach the form to the tax return, we are in the risk of being penalized. So when you put in a perspective that yes, you have a refund, but if I do this in this way, it will cost me $50,000, is when you think it twice, it's better not to do that. Okay? Because you knew that you have to file it, you file your tax return without it, and then the IRS can say that you didn't do it the way they're supposed to. So it's dangerous to do that kind of things. So the forms that needs to go with the tax return, please attach it to the tax return. Okay? Even though there is a shell corporation, I mentioned earlier that there is a special ways or threshold that you need to comply in order to file the 5471 because it's very complex. Have different ways of being filed depends of the corporation situation. For example, who are the owners? How much is the asset? Is this is a dormant or this is an active business? Okay. But it's a form that needs to be with the tax return. Must be with the tax return. Uh-huh. What happened? I know there is a difference between the SA and the S. The 8938. Yes, the 8938 is like the last form. Basically, what I understand the 8938 is the combination of the financial accounts with the asset, with the foreign asset. So when, for example, I have a client who has 68 bank accounts. I have so much fun when I have to do that. 68 bank accounts. So for example, so we report all the 68 bank accounts. He has a corporation, his personal home, there is a corporation, so I have to include the 5470, I have to include the 5471. And what include is the form 8938. And some of the handouts, okay, I think I include the form, the 8938. This is the form, okay? I know. I know. It's funny because when I'm trying to explain my clients, I need to have the form in my hand because it's not the same that I see the form and I have even memorized it. Then I explain it to someone else. So I apologize if some of you doesn't have it. So I'm going to get closer. So the 8938 forms, what they basically do when you have a 5471 is that you have to mark it over here in some place. This is the 5471. Over there, the only thing that you need to do is mark it. You don't have to fill out another 5471 because in that case, the IRS, what they say is there cannot be double paperwork or something like that. So the 5471 is a form, when you do the 8938, is just to mark here and include all the bank accounts. Excuse me 1 second. If you be so kind to pass it, it's aquí there. That's it. That's it. Thank you. So yes, I have the 8938. So at the end of this seminar, I will show you what it is. So, but the 8938 is basically a combination of foreign financial accounts with foreign financial assets. This is the different thresholds that we have for that particular form. I mentioned to you guys that even though that it's not necessary that you need to file this particular form if you are in the United States. Over here is if you have foreign financial assets. So if we have foreign financial assets, normally we need to see what needs to be done. Okay? Have more than $50,000 in the last day in for example, Costa Rican bank account, right? Or 75,000 anytime during the tax year, you have to file the form, the 8938. The other one is, for example, just give me 1 second. Ay, huepucha. Ahí está. So, okay, for example, for people this is a married filing jointly returned, which is very normal, like today. So, for example, if you guys are living in the United States, but you have a Costa Rican bank account that have more than $100,000, you have to file the form 8938 with your tax return. Or if, like you guys, if you decide to live in Costa Rica, and especially when you go and buy a house and you open up a Costa Rican bank account and you put $400,000 in that bank account, or $600,000 at any time during the tax year, you have to file the form, because this is the only scenario that I might think of that you might have this kind of money in a Costa Rica bank account, especially when you guys, if you decide to, this is an example, if you decide to take the money from United States directly to the realtor, okay, it's no problem. But if for whatever reason you decide to open a Costa Rican bank account, put the money to purchase the house, okay, and then pay the realtor. So in that circumstances, yes, you might have to report your bank account in two places. You have to do it in the FinCEN, ¿verdad? Reporting foreign bank accounts, and the 8938, which is go with the 1040.
Sorry to interrupt. They will never pay the realtor directly for anything.
Okay.
Money will always go to escrow, which is the third party. They will disburse the money to the seller, to the realtor.
Oh, great. So it will never happen that.
That will never, if it happens, there's something wrong.
Okay, that's great. That's great. No, thank you so much for mentioning that. Yes, just as an hypothetical example, so you can see when this might happen. But like Evo says, is that is the structure that you want to use, that's fine, because you don't have to do any reporting. Okay, let's welcome love. For example, the IRS allow people who is non-U.S. citizen file a tax return, okay, with a person who is not U.S. citizen, okay? I don't see personally the advantage of that, and this is why. When you decide to marry filing jointly with a taxpayer, what happens is the person who is non-U.S. citizen choose. The word is choose to file the tax return with a U.S. citizen, and you have to report all the sources of income. If you have foreign bank accounts, you have to report it. So in other words, you only for tax purposes. The word tax purposes, nothing else is the only way, or is the only advantage of that. So let's rephrase it. I'm sorry. When you file a tax return with a U.S. citizen and you are subject to the same reported requirements than a U.S. citizen, only for tax purposes. That doesn't have any immigration advantage, so on and so forth. The only thing that I can see is that you have the economic power okay, to support yourself. But besides that, when a U.S. citizen file a tax return with a non-U.S. citizen, they have to do all the foreign, you have to report all your sources of income, and you will be treated as a U.S. citizen. Sí. 5 minutos. Ay, I will be finished soon. Sí, no. Eso no. So, well, I'm about to finish my presentation. I hope you guys enjoy it. I know it's not the most excited thing in the world, talk about taxes, but now I hope I can give you a good information that you can speak with your tax advisor, your tax practitioner, your tax preparer, with whoever you want to talk about taxes. Yes, so please take that in consideration, and I appreciate your time. Thank you.